Hi everyone, welcome back to ASX Market Watch. Thank you very much for joining me today. It's really great to have you actually. We're looking at the entire world economy from a chartist point of view, which is great if you look at it from fundamental reports or broker reports in your own trading or investing, or even if you just like to look at the news every once in a while. Another great way to see where the market is heading is to look at the price charts. Now the price charts of your particular index, which will tell you which direction 3 out of 4 stocks are actually trading, because 3 out of 4 stocks will tend to follow the overall index that you're actually trading. Now that could be down under Australia, which is where we're looking at first. We've also got the Americas, we've got Europe, and we've got the Asian region, the Hang Seng in Hong Kong as well. So stay tuned, we've got a lot of stuff, and we're looking at the entire world, as I said, and we're just going to see where we're heading, and we're going to use a few different tools which are actually exciting and you can use in your own trading as well. So that's really great stuff. But first of all, of course, where are we going to start? Down under Australia, on the All Ordinaries, my home market. So what can I do? I have to start there. It's all that I can do. But best of all, I mean, it's the one that I actually trade myself, and we've had this downtrend line. Now, obviously, what is that, guys? That is a simple line on a chart. It's this. I mean, if you had a ruler and a pencil, you could take that and draw that anywhere. Anyone can do this. It's so ridiculously simple. And what we found is that the market actually consolidated, or it actually found resistance at in the future at that downtrend line. Now that's what the market will tend to do. It'll tend to find support and resistance at trend lines in the future. Just a little tip there as well. But what I really want to show you on the All Ordinaries at the moment is this little gap here, and I'll just try and enlarge this. There we go, that'll make it a little bit bigger. What we've got is this gap. Now this gap in candlestick terminology, Japanese candlesticks, is termed a window. Now there's two things about windows that you really need to know, guys. The first is that the traditional approach to gaps or windows is that you trade in the direction of the window. However, the other thing that people say or traders say about windows is that the market doesn't like to leave a window open. Now what that means is the market, as you see here, it's made this gap, but it's gone and traded back through that gap. So that means that the window is now technically closed. Now all that means basically is the market is now free to rise. However, obviously we can only wait and see what the market will actually physically do. So those are the two things that you have to remember about windows. Now, have we had a confirmed exit signal on the All Ordinaries yet? Absolutely not. And our target previously was 5,000 points on the All Ordinaries. Obviously, guys, if everyone's waiting to sell at 5,000, it's never going to reach it, simply because people are going to want to get the jump on everyone else. No one wants to be the last one on the boat, and potentially that is what's happening right now. However, we need it to be confirmed by a proper exit signal. Now, what I want you to look out for is as a potential exit signal on the All Ordinaries, this is what I actually use myself, is a down move here. This is a daily chart, so each one of these bars is 1 day. Now, we've got a down move already. All we'd be looking for is an up move and then a down move through the previous trough here. So that would result in a little zigzag pattern down. Really, that's a simple exit signal that you'd be looking out for on the All Ordinaries. Haven't had it yet. And what else? It's also above its uptrend line still. And also further, if you want to take it a step further again, this longer term uptrend line still got a lot of support at 4,600. So what we're looking for as well from an Elliott Wave point of view, if you want to add another tool to the mix, Elliott Wave moves in 5 waves, guys. So we've got 1, 2, 3. This was what I am thinking is our third wave at the moment. Now, if we were to be moving into our fourth wave after this, a fourth wave is traditionally a sideways movement. So even though we've had enough of sideways movements over the last 12 months, I mean, look at, if I could just make it, there we go. This sideways action, really, it's been a little bit painful for a lot of people. There have still been opportunities, and you've just got to pick and choose very wisely at the moment in the markets. But what we're potentially seeing on a shorter term basis is that sideways movement in a wave 4 pattern. And that would just sort of go along here around the 4,800 mark for a while. Obviously, yeah, that's what you could potentially see. But as I said, we've still got all this support. So if the market heads up to 5,000, happy days. Look out for that exit signal. Just keep yourself posted. Until then, the trend is up. And next one we're checking out is the European markets, because the European markets love these guys, because these guys are actually the strongest looking market at the moment. Now, why do I say that? Because even though it looks very similar to our other markets markets as well. It's still technically above its uptrend line. The last bar that we had was a really long-tailed bar. And again, if you want to get into candlestick terminology, guys, I know this isn't a candlestick chart. However, you can still see the candlestick patterns in these charts if you look closely enough. What we've got is a long-tailed bar, which means the price went down during the day, but it also closed back up on its highs, which means buyers came back into the market. Now, that also means that the market is technically strong from a price perspective anyway. It means that people are still willing to pay these prices. Now, our top target, based on an Elliott Wave pattern, if I could just get this out there. Yes, I think we'll be able to see this. And there we go. From an Elliott Wave perspective as well, we were looking at a price target of 6,000, and it's quite possible that we might actually see that in the FTSE, simply because, as I said, that bar, it's indicating strength on the FTSE at the moment. And if we just enlarge this a little bit, there's 161.8%, which is that's your most highly probable move for a Wave 3 in Elliott Wave. It's around the 6,000 mark, which is also a round number, which is tends to be high psychological resistance or on the FTSE, or like on any markets as well, is a round number. But again, well above its uptrend line, still in an uptrend as well. 6,000 would be the most likely target for the FTSE. And obviously, similar deal on the FTSE, guys. You would be looking out for a close below the downtrend line, below the uptrend line. So a little zigzag pattern down, basically 1, 2, 3, little ABC correction down. That would be your exit signal on the FTSE. Nowhere near it at the moment though. So happy days on the FTSE. The next one quickly is the Dow Jones, and already drawn in the stuff on the Dow Jones, as we can see. So what we've got here is it's still well above its uptrend line. It's a very steep uptrend line as well. Again, really simple stuff. It's just simply a line on the chart. Our top target for the Dow Jones was 11,600. And that's where we were looking for the market to go as a top target. It's been in the zone for a reversal for quite some time, and that's what we were looking at previously. It hasn't happened yet. Again, what we've got is our we just want a little zigzag down for it to confirm an exit signal on the Dow Jones, but again, it hasn't happened yet. Now, one thing that I really want to show you on the Dow Jones is consolidation at previous highs. Now, the previous high was 11,192, guys, and what you really need to know about previous highs in the marketplace is that the market tends to consolidate around these levels. Why does it do that? Very simply because as it reaches new highs, the people who bought down here start to freak out a little bit and they start to sell. So they're selling all their holdings up here. But also, it's making new highs, and so we've got new buyers coming into the markets, and they're actually continuing to push the price up. So we've got people selling, people buying, people selling, people buying, and it just pushes the price around this little level, around the previous high, for a little period of time. Now, what's the best part about that, guys, is Wave 4 moves in a sidewards movement as well. So we've got these things converging, these all these tools that are converging at the same time. What I mean by that, if I could just clarify that a little bit further for you, and if my tool would work here as well, that would probably help. Here we go, and there we go. Wave 1, 2, 3, and 4 would be a sideways movement. So it's reached 125% of the previous move. That's a decent move. I mean, as I said, the most highly probable move for a Wave 3 is 161.8%. Obviously, it's different every single time the market changes, and it's reached 125%, which is happy days. What we're looking at is this potential sideways movement on the Dow Jones in a Wave 4 at previous highs. So all these things are sort of converging at the same time. So really, you'd expect the market to hold above the 11,000 mark for a fair amount of time, just in a sideways movement, or at least not drop below it for too long at all. Now, last but not least, guys, technically it's in an uptrend as well, still, guys. So still in an uptrend on the Dow Jones, and really, if you're looking at this sideways movement, it's going to be an excellent entry signal if and when it breaks out of that sideways movement when that occurs. Last but not least, guys, Hang Seng. Hang Seng has been probably the most beautiful chart in the world, basically, from an Elliott Wave point of view. Why is that? I've just marked it in, and you guys will know this off by heart by now. We've got 1, 2, 3, 4 ABC correction. I just spoke about this last week, why we chose that as well, and why we picked that as the very bottom for the Hang Seng, and why we made our first target at just in late 24,000s. So that's exactly where the market has reached for now. How good is that? The market's reached all our targets for the Hang Seng. Our top target for the Hang Seng would be between 27,000 and 30,000. Obviously, it's reached the first target now. So all we're looking for is that zigzag movement down. Exactly. So that would be our short-term exit signal on the Hang Seng in Hong Kong as well, in Asia. So really simple stuff. There's not too much else to say about the Hang Seng other than it's done exactly what we've said it would. I mean, if you really wanted to get nitty-gritty, actually, what we could be expecting, and again, this would be like taking our Elliott Wave down one single notch. This could be one of the counts that we're looking at, is wave 1, wave 2 on a shorter term basis, heading into wave 3. Oh, okay. How good is that? Okay, 1, 2, 3. Look at where it's reached. 161.8% of the previous move. Okay, that's your wave 3. As I was saying to you previously, guys, wave 3 tends to move. That's the most highly probable move, is 161.8% of the previous move of wave 1. So that's exactly where it's reached. I didn't actually realize that, but you've got to love that. And now, and again, where does wave 4 go? In a sideways movement. Exactly. Spot on, guys. You guys have got this down pat. Seriously, that's what we could be expecting on the Hang Seng on a shorter term basis. Anywhere above 23,000 would be happy days on the Hang Seng. And then when it breaks out of that sideways movement again, we could expect it to hit that later target, which we've been saying way back since July, August 2010, of 27,000 to 30,000. Loving that chart, guys. That's the most beautiful chart, really the most beautiful chart in the world at the moment. At least from an Elliott Wave point of view. Everyone else, every other chart, you know exactly what's going on. They're all in uptrends, seriously, but obviously you just want to keep an eye out for that exit signal, and you also want to keep an eye out for that sideways consolidation, which everyone seems to be moving in the direction of at the moment. Loving it! How good is the market? Man, it's a great place to be. It's a great place to have a little bit of fun, and a great place to make a little bit of dosh as well. Happy days for that. Alright guys, until then, I will see you next week, and happy trending. Keep your stop losses in and keep your money management right. Guys, I will see you next week. Bye for now.